Hey there, Matt the Mortgage Guy, recording a video to put out there to talk about housing market data. A great report the Black Knight data puts out every single month. And I think it was last Wednesday, I listened to the webinar, and then about a week later, they published the report along with a replay of the webinar. So today the report came out. I wanted to record a video, not just to talk through the data and kind of just regurgitate it out at you, but talk about what I think it means and what me as a mortgage broker is seeing, hearing, and feeling in the housing market, because more than anything else, I think that's what's relevant. And, a report like this might mean 5 different things to 5 different people. Unfortunately, if you're watching YouTube and you're watching multiple different people, you will have people just using what I like to call, I don't know, just throwing terms out, right? And then they're connecting this term with this outcome with no real reasoning in between. Market crash because forbearance, or market crash because of whatever the heck, right? And so real true data from a company that does it really well. And we'll talk about exactly what it says, what I think it means, and what we can reasonably expect. None of us know exactly what to expect. But when we start assigning numbers to things and saying, oh, these number of people are coming out of forbearance in this month and these number of people that month, we can kind of get an idea for it. So before I get started, just have to say it because we got the Brewers jersey in here. I am from Northern California, grew up on Jose Canseco, Mark McGuire, Will Clark. So Bay Area baseball, Oakland A's, San Francisco Giants. I'm just helping coach my son's Little League baseball team. That's why we're representing Brewers today. So very important to highlight that. This is a copy of the 22-page report. I'll put a link down in the description so you can go over it yourself and kind of read what Black Knight has to say. Here's kind of a highlight of what is going to be enclosed in the report. And really what I want to talk about is forbearance and forbearance activity, which I feel like it's probably a dead horse that we've beat to death. And then just housing market data and affordability, because these numbers will surprise you. Most parts of the country, it feels like homes are super unaffordable. And then you look at 08 versus today and realize that the principal and interest payments are actually lower today. It'll surprise you, because most people in that 13-year span have seen an increase in income and payments are lower when you take into account the availability of mortgage at a very low interest rate. So without further ado, this was an interesting one where if anybody who's trying to preach market crash wants to do, they'll look at this 2.61. The delinquency rate is up. This is the beginning of the crash, right? It's funny because in here in the report and when they spoke through this webinar, they talked about how this was more than anything based on the calendar. And they had a historical chart, which I won't get into detail inside of here, but anytime the month ends on a Sunday, this delinquency rate tends to be higher because there's less days to collect that mortgage. And this is talking about February stats. So the 26th of February was on a Friday, then 27, 28, the month ended on a Sunday. So you only had those first 26 of the days to collect. So people were seeing 30-day lates a lot sooner than they would if it was a 31-day month and it ended on a Wednesday or something, right? So anyhow, that's that. It's foreclosure starts being down a ton is no surprise. You can't foreclose. There's moratoriums. And so that's just something that is kind of due to the market, and you shouldn't read into it more than you have to, or let anybody put out stats that are misleading because of it. So there's that, and this shows this huge spike in delinquency, which was like before they really got into place, everything that they got into place as far as forbearance goes, like. This was an allowed delinquency, right? You shouldn't look at this and be like, oh my gosh, these delinquencies. They were like, go ahead and become delinquent on your mortgage. Don't worry, you don't have to pay. And so it's steadily gone down until this recent little uptick right here. And so as people have exited forbearance, we've talked about it a million times. They're performing. And say what you will about they're performing because of this or because of that or because they got stimulus or whatnot. I don't see people struggling in forbearance at the numbers that would cause any sort of market correction, which people talk about. there's a few of these slides that I really want to dig into, and in the interest of time, I'm only going to pick a couple of them to dig into, and I'll have the full report below, because if I dug into every slide, we'd be here for 30 plus minutes, and I'm not doing that. This is the Sunday month ends versus the non-Sunday month ends, and it shows you the light green how it has a huge impact on the delinquency rate. And so the fact that February's delinquency rate is up 2%, don't read into it. The month ended on a Sunday, less days to collect, more people were delinquent because of that, and really that alone, right? This is something that's kind of interesting as far as mortgage payments received, and through the 25th, where some people pay it on the 1st, some people pay it on the 5th. People have until the 15th till it's even considered late. And then the 25th is when they start inching towards getting a 30-day late on their mortgage and showing signs of having issues. And March, it's like a record number, 91.4 mortgage payments received through the 25th day of the month. So people are performing on their mortgages. And I don't know, I just already hear people about, this isn't counting the people that are in trouble. Yaddy, 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 right? Active forbearance plans continues to decline. I think we're right around 2.5 million, right? So 2.5 million people. I think at its peak, there was near 5 million. And total is like 7 million that have been in, been out, newly in. Total people that have taken forbearance at one time or another, I think is a $7 million number. And that's down to 2.5 million, continues to decrease. In the video I put out a few days ago, 4.96% of mortgages are in active forbearance. And every month it's like 5.2, 5.14, 5.05, 4.96, continues to go down. In a later slide, I probably won't dig into it because I have on other videos about what's happening. But by and large, people are refinancing, selling their homes, and moving forward. And like I said in the prior video, it's not a function of like they're selling because they have to sell. It's a function of their planning on selling. That's why they're coming out of forbearance, or they're in a plan. Almost all servicers have a plan. Just put it on the back of your mortgage. It's super easy. Trust me. I talk to people every single day that enter forbearance for one reason or another. Some of them are saving up money, paying off other debt, doing it as a just in case, whatever it is, but they're coming out and they're fine. Vast majority. And now we're down to 2.5. So here's what I really want to talk about, because everybody who has this I don't know, there's just market crash videos galore. There's too many to count on YouTube. And everybody talks about, well, you wait and see, Matt, it looks all rosy from your lenses. But once people come out of forbearance, I've said it before that the number of listings right now, 1 million versus the 3.7 million that we need to just be in a balanced market. I'm not talking about a market that there's going to be, a buyer's market and you're going to be able to bid 50,000 lower and prices are going to come down. I'm just talking about a balanced market. 2.7 million homes, we become balanced. Nice and easy market. List for 450. A couple people come through. You get a couple offers, one at 440, one at 445. You pick 445. That's a nice balanced market. A couple offers on each house. Check this out. March, 460,000-ish, we'll call it, are scheduled forbearance expirations. They'll be out of forbearance. Then close to 700, another 450, 650. These people are exiting forbearance, right? Let's total those 9. Let's just call that 7. So that's 1.6, 2.2 million. If every single one of these, we'll include this one in too, and we'll call it 2.3 million. Every single person who exits forbearance, forecloses, will go from 1 million listings, and it will take a while to foreclose, but let's just say it happens fast. We just got some speedy foreclosures. Go from 1 to 3.3. So we're going to add 2.3 million foreclosures. We still won't even be in a balanced market. We still won't have enough listings to at least quench demand to the point where we're in a balanced market. So you're telling me that we're going to have a huge foreclosure crisis and we're going to have a crazy buyer's market and prices are going to fall off a cliff? No freaking chance. That's if every single one of these foreclosed. You know what the stats are probably closer to? 1 or 2% of them. Call it 5, call it 10%. Call it catastrophically 20%. And we're still nowhere near the amount of supply we need. I don't know. Rant over. But that one, to me, I understand math. Extensions, removals by week. Less and less new starts of forbearance. I think that's all I really wanted to cover. I'll link this down below. See, this is 2020. It tells you kind of when people entered, and it makes sense why they're exiting, right? April, May, June, and July were the 4 months where they entered forbearance, and they've got 12-month forbearance plans expiring Q2 of this year. So for all the people that are preaching about this big market crash, here it comes. Q2. Everyone's exiting forbearance. We'll see how that goes. Oh, that's what I want to talk about. Affordability. Where did that go? This one was cool. Payment to income ratio. Important, right? Back here is 06, 07. We were in a crazy market. And people on average had a payment that was a third of their income. The even wilder part is I bet that this doesn't even account for the fact that they were adjustable. So that they were due to go up, right? A third of your income, and they could go to 40%, 45%, 50%. Nowadays, the average payment to income ratio is 20%, and it's a fixed rate mortgage. It's a product that is just light years better than this product, lending wise, and much less when you think about payment to income ratio. So with that in mind, when people talk about home affordability and it being impossible, like the home affordability index disagrees with that sentiment. The numbers disagree with the fact that it's impossible to buy a home and it's super unaffordable. Don't get me wrong, rates shoot up to 4% or 4.5%. It's going to be tough for a lot of people. But just looking at it apples to apples right now, here's that chart I talked about a little bit earlier. Is that back in 07, 06, 07? 1389. Is the principal and interest payments. This isn't accounting for tax and insurance. This is just talking about principal and interest. Here we are 13 years later. Current rates, 1203. It's gone down. I thought this was interesting. You know, rates go to 3.4. And the payment to income ratio is going to... Freddie 30-year. Okay. Is going to increase. So it's something to watch, right? But all in all, if you really want to, subjectively look at affordability, you want to look at what's really going to happen with forbearance, I think you have to look at these numbers. I think you have to obviously be aware of some things that could affect the housing market, but don't buy into people using certain words and connecting them to certain outcomes with no amount of reasoning in between. That's what's happening. Everyone's talking market crash. Everyone's using forbearance, eviction moratorium, whatever words they want to use that get your attention. Like, oh, this sounds like somebody who knows what they might be talking about. And the market's going to crash. Q3, Q4. And if it bleeds, it leads. They'll continue to make as much doom and gloom. What do they call it? FUD, fear, uncertainty, and what is FUD? I don't know. Hope this was helpful. Any questions at all, please feel free to reach out. Matt, M-A-T-T, at mattthemortgageguy.com. Hope you found this valuable. Hope this reaches you well. Take care. Bye-bye.